Well, we meet again. I do wish it was under better circumstances, and if you have no clue what I'm talking about the fact that when the market closed on Friday, February the 21st, it was a bloody mess. I'm talking about the fact that it was a historically bearish day. I'm talking about the fact that it was a red wedding-esque type of a situation. It was no bueno mi amigo, and in this video, I have some unfortunate news to share. I gave all the numbers and data to the boys in the lab, and those nerds told me it's about to get worse before it gets better. At least that's what the historic probabilities tell us, so that's what I want to break down in this video. Of course, I also want to explain how we got into this situation and exactly how we knew to properly play it to stuff our bag full of tendies. I'm going to be telling you everything going on and how to properly be prepared for the upcoming week. If you enjoy these types of market breakdowns, obviously don't forget to like, subscribe, and do all that jazz. And with that being said, let's rock. Now, to better explain how we got here and where we're going, I need to rewind a little bit. When the world's largest casino officially closed on not only Friday, but obviously also on the week, here was the headline. Dow drops 700 points, the worst day of 2025 so far, on new fears about economic growth. If you saw the heat map, you would realize I was not kidding when I said it was a red wedding type of a situation, an absolute sea of red. The SPY vomiting 1.7%, and remember that number because it's going to be very important later in the video. Lock that away. A drop of 1.7%. The Nasdaq getting absolutely clobbered, 2%. At the point that I'm filming this, Bitcoin not so bad, around 96,000. And if you watched the stream over the week, you know that I was calling out Tesla was uniquely weak, dropping an additional 4.7%. Clearly, we have a lot to get into, but it really does get a lot more scary when you realize that the SPY, this was a dagger. We broke the recent lows. We broke a trend line. We broke another trend line. We barely caught ourselves at the 50 EMA, and obviously things could get real dangerous if we take out last week's low below 598.51. Similar situation when you look at the daily chart of the Qs. We are taking out all the recent lows, the trend lines, we're vomiting through the EMA, and obviously now we're looking at the 50 EMA kind of with last week's low right in the range of 522. So just throw those on your charts. They could be key levels. Now, to truly understand how we got right here in such a mess of a situation, you have to understand what's going on politically, but also with market structure specific to options. So the three government monetary policy type of things you have to understand go like this. Number one, we don't know what in the world's going on with tariffs, what Trump aims to achieve with his tariff plans. We know right now that there's quite a bit of uncertainty because over the next month, we're assuming that there's going to be an announcement of more tariffs, but we don't know who it's going to impact and how much it's going to impact them. And remember, the market hates uncertainty. This is making the job of the Fed very difficult as it relates to monetary policy. Remember, inflation is ticking back up. They're trying to bring it down. Thus, the Fed fund rate is high. We thought we would be bringing the Fed fund rate down by now, but it looks like at this moment in time, and this could change on a moment's notice, I just want to add that little caveat in, that we're not going to be getting a Fed fund rate cut at minimum. The first shot of it is maybe mid this year. I'm talking about July. The Fed is stuck in neutral as it watches how Trump's policies play out. Once again, another piece of uncertainty, and you're going to be noticing a common theme here. We also have uncertainty on the larger political level. Trump-Putin summit preparations are underway, according to Russia, also backed up by the US. But really what I'm trying to dive in here is ideally, the tensions between Ukraine and Russia are going to come down. But what's strange and the world doesn't really understand is that this is all being decided and Ukraine's not at the table. Also, the EU's not at the table. This is just happening between the US and Russia. So that's making Zelensky pretty mad. And we're getting some news that he might be stepping down. So basically, it's just adding to some potential instability on the political level. Once again, another piece of uncertainty. So coming into really Friday, which happened to be OPEX, aka options expiration, a lot of big money players had to make big money decisions. Were they locking in profits, losses? Were they going to roll out? Were they going to completely reposition? And when you add in the fact that there was quite a bit of uncertainty, that little bit of a sprinkle, it got dangerous. Now, to get more into this specific market structure, if you were paying attention to tools such as Spot Gamma, you could see where all the positioning was. And that's exactly why on Thursday and on Friday, I was screaming from the high heavens, watch out below. If you don't believe me, I have proof of it. On Thursday, February 20th, watch ASAP. Urgent. This almost caused a market sell-off, and that came to fruition the very next day. Folks, this wasn't some hocus pocus type of just random prediction and magic. This was all understanding that yes, we were in a state of uncertainty. We were coming into OPEX and we knew all the options positioning. We understood the market structure. And I don't want to make this video completely boring and nerdy, but we had to know, and I called this out not only on the live stream, but also in those update videos, that there was a bunch of structure from the options perspective at the SPX level of 6,100. And I said, if that goes, look out below. And that's exactly what happened. Like I said, this isn't magic. You can see all the structure. This information is out there. Now, obviously, as I alluded to, SpotGam is my favorite, but when we lost that level, which we could see was a huge level, man, it got bloody. To see the flow on the day, it just got clobbered. And even here, when there's a little bit of delta relief, you might be like, oh, some bulls are coming in. They weren't coming in. This was the bears closing out, as in hitting the cash register, as in taking their money off the table because they made an absolute killing. Folks, I cannot clarify this enough. This is stuff that can be known and studied beforehand. This wasn't a random guess. That's exactly how I knew it in this video. And yes, you might be thinking,
okay, man, if you knew it, did you make money off of it?
You bet your bottom dollar. My option swing account made $40,000. I also happened to make another $67,000 trading futures, which this was all streamed. This was all called out. I made over $100,000 in one day. Now, I'm not calling this out to brag to anyone. I'm trying to clarify the point that you can know it beforehand. This isn't random luck. And if you're interested in learning more, you can join up with the Goonie Trading Discord for free. Just don't forget to use that promo code Goonie, because that's how you're going to get free access. It's in the description of the video. But here's the TLDR. With the uncertainty on the geopolitical level of what was going on with monetary policy, and also the tariff situations, the tariff war, the trade war, whatever you want to call it, pairing that together with OPEX, pairing that together with the large options positioning at 6,100, realizing there was nothing below it. If the level gives, man, oh man, are we going to drop? I called it out the day before. It came to fruition. I hope you made a killing. And now this brings me on to my next point, why I think it's going to get worse before it gets better. Heading into the end of February, we are in the final week. From a seasonal perspective, over the last 30 years worth of data, the final week of February does favor the bears. And if you want to get a little bit more granular with it, you can see here on Edgeful, yes, the monthly view, the seasonality of February favors clearly the bears. But then when you look at the weekly view, the week we're going into is one of the most bearish weeks of the entire year over the past 5 years worth of data. The most bearish week. And then from there, there's still 3 more bearish weeks. I want to throw that out there. So just from a seasonal perspective, we know that the bears are clearly in control, but now we have to get into a conversation that I think is a little bit more damning, if you will. Remember at the start of the video when I told you, remember that drop of 1.7% on the S&P 500? In the entire history of the S&P 500, on Friday, there has only been 94 occurrences of the market dropping more than 1.5%. And I said, okay, out of those 94 occurrences, tell me what happens the next day. And the numbers suggest this. 90 out of 94. We're talking almost 96% of the time that the low on Friday is in fact taken out on Monday. As in, I am sitting here right now telling you I am 96% confident that in the next trading session, i.e. Monday, February the 24th, we will be taking out that low on Friday. Now, am I 100% certain? No, but I am 95.7% certain because that's exactly what the market has done in the past. And then when I pair that with the fact that, yes, there's still a lot of uncertainty. Yes, people are still very concerned because this made headlines. And then I pair that with the seasonality, I feel very confident that, as I stated at the beginning of this video, it's going to get worse before it gets better. But wait, there's more. Not only for Monday, but really for the remainder of the week, there are key things you have to know are going down that are going to be impacting the market. With respect to major macroeconomic events, we're going to be getting the CPI, the inflation report out of the Eurozone tomorrow, Monday at 5 a.m. Consumer confidence, and then we're also getting new home sales. We're going to be getting a GDP reading on Thursday, and we're going to be getting a U.S. inflation report on Friday, the PCE, the personal consumption expenditure, which according to the Fed is their most important, most lofty, most weighted measure of inflation. So that's going to be going down Friday. Don't forget, we're in earnings season. There's some very popular ones: Berkshire Hathaway, Zoom, Home Depot, Kava, Lowe's. NVIDIA is probably the biggest one of the week. Snowflake, C3 AI, Salesforce, Dell. Feel free to screenshot this. Very, very important. And as I kind of been saying throughout the video, lots of uncertainty. Ukraine's Zelensky said he'd be ready to give up presidency if it brought peace and NATO membership. So this alone, at least from a political standpoint, might be turning the uncertainty from level 9 up to 10. My point being is there's a ton of political things to pay attention to, a ton of monetary policy things to pay attention to, straight up earnings reports, seasonality, very bearish stats coming into this. Man, oh man, get ready, because volatility is here and it is here to stay. Now, obviously, I hope you got something from this video. I'd love to see you in the free morning streams, Monday to Friday, 9 to 11. I did generally trade my entire accounts for you guys to watch. Maybe I do well, maybe I've ruined my entire financial life. Who knows, but I hope to see you there. I'd also love to see you in the Discord. Don't forget, you could sign up for free with that code Goonie, all in the description, and I'll make sure it's pinned in a comment. Obviously, if you have any questions, comments, concerns, let me know in a comment below, and I will do my best to get back to all of you. I appreciate your time. Love you all.